Hello, my name is CryptoCube and I welcome you to CryptoCube's Trading Hub. Today I'm going to be discussing how to amass wealth or how to make money via trading. This is not a technical analysis lesson. As we know, making money is not exactly or is not 100% with technical analysis. But to make money while trading, it involves three things, like I've always said in my psychology lessons and risk management lessons, that to really make money while trading or with trading, you need three things, which are you need your trading psychology in no particular order, but these are the three things that you must have or you must know well. Then you need a very good risk management, or you have to manage your risk very perfectly. Then you need a very good strategy. And when it comes to very good strategy, we have different kinds of strategy, which ranges from the use of indicators to price action. And with price actions, we have order flow, supply demand, support and resistance, candlesticks patterns, chart patterns, and many more. Why some people prefer to use indicators in their strategies. But strategies, or let me say, no strategy is 100%, which means a particular strategy can never give you an 100% win rate. That every time you come into the market and you spot a point of interest with your strategy and you execute, it is not guaranteed that that same strategy will give you a 100% win rate over time. It's not possible. Nothing is 100%. So, why a strategy? You might imbibe in a strategy today, and let me just say, the market is dynamic. And what this means is, looking at this point of interest, price comes in there and it rallies. It doesn't mean that the next time price comes in there that it will hold. Or in another scenario, you might have the same setup as this, or before these other price actions happened, and then it will fail because the market changes. Market is not static. It's not a robot, or it's not programmed like every time this happens, this will happen. So the market is dynamic. Something works today doesn't mean tomorrow it will work. So you may have a strategy on a particular day, assuming you take 10 trades, and you may win all the 10 trades, which gives that strategy a 100% win rate for that particular day. Seeing that many YouTubers will come online to show you they have found a 99.99% win rate strategy just because they took 10 trades in a particular day and they won all the 10 trades. And you now, as a learner or as a beginner, or even the person who posted the strategy himself, may then enter another trade on the next day with the same style, the same strategy, and then lose all the trades. He can take another 10 trades in another day and lose all. Will he then report that his strategy is 0% win rate? No. What it means is there are some times the market will react in a particular way, and in other times or other days it will react in an entirely different way. So no strategy is 100%. Most strategies can be 30% win rate, 33, 35, 40, 45, 50, 55, up to 85% win rate. There are sometimes there will be 100%, and there are some days there will be 20% win rate. So this brings us to the conclusion that strategy is not really the key to making money when trading, but your trading psychology, which means you have to understand that no matter the strategy you have, find the holy grail as much as you can. If you are going to lose a trade, you will lose a trade. So you have to understand that, number one, you do not control the market. Number two, your money do not move the market. And number three, nothing is 100%. So knowing that means if you have a point of interest, you can use as many filters as you want to filter it out so it can be like a perfect setup for you. Like for example, if you're trading supply and demand, some people may see this small move here and decide not to take this on, but this particular will be at this point. Whereas some people will say this has some bit of wick on the top and they refine it like this. So it all depends on how you perceive the market reacts. So you have to fine tune the market to your style, and then you have to apply your psychology that, okay, once you have a clean setup by your style and by your filters, then you should pull the trigger. If you do not have the mindset to pull the trigger, then you are never going to make money. And this is where risk management also comes into play. Once you have a point of interest like this, how much are you willing to lose in the case this trade then goes against you? You apply psychology in the essence that you know, okay, I have a sum. I don't know if it will work to my interest or it will work against my interest. In the case it works in my interest, then fine, I will make money. But in the case that it works against my interest, which means I will lose, am I ready to drain my accounts on the entire move? Or am I ready to calculate and take some little risk? So how much will I be risking if this trade goes against me? I have this zone. Where should I place my stop loss to protect my capital? Should it be at this point? Should it be at this point? Should it be at this point? Should it even be very close to the zone? That depends on your strategy or your technical analysis, where it tells you to place the stop. So wherever you are placing your stop loss to protect your capital is risk management. So, and how much you are willing to lose in the essence that that place gets triggered or that your stop loss gets taken, that is risk management. Sorry. Then psychology is just telling you that, okay, I don't control this market. I'm seeing this. It looks like a very good setup to me. I've checked my filters. It looks perfectly okay. I'm taking the trade without clouding your sense of judgment with another thing. It looks good, I'm taking it. But how much am I risking in case it goes against me? Risk management. Then your strategy, the win rate of your strategy will then determine if you get to lose it or if you get to win it. And looking at this particular area here, we have some points of resistance here, where we have the first touch, second touch, third touch, or third touch, then fourth. Some people will be shorting at this particular point with their stops above here, which means they have their stop somewhere above here if they are shorting here. And as you can see, price came into the resistance zone. Probably they have a limit short order, and then it pushed down, creating a sort of pin. This will even give them the confirmation traders to enter short. So if they are entry short or they have their shots below here, stop above here, it didn't trigger if you place a sell stop. But if you enter on close of this candle, being a pin, expecting it to come back down, you have your stop above, like the aggressive trader will place their sell orders right on here. So it gets to take them out. But once this happened, how much are you losing? That is risk management. But your psychology tells you that, okay, you have a good zone. 1, 2, 3, 4 touches. Fine. It's a good resistance or it's a confirmed resistance. Are you taking the trade? Psychology tells you to take it because you never can tell which will work or which will not work. And because of this, I made a calculator to check how far or how much we can really make when trading. Can we really make too much money? How fast or how far can we grow an account? Let me put it that way. So, your psychology tells you now that you have to pull the trigger. Your risk management tells you how much you are willing to risk by that trade. And your strategy then determines how many percentage your winnings will be. So let's assume you have a $500 capital This is the calculator I made. I refined it. I had a calculator before. So I refined. Let me see if I can still get that one. Okay, I had this one before, but this one, it has less, it's not as how do I put it? It's not as engaging as this particular one. So if I have a $500 capital, how much am I risking on my capital? I'm trying to risk 2%. You can risk 0.5, you can risk 1%. It depends on how much you can afford and tolerate to lose when that trade goes against you. So by that means starting risk will be $10. Then 2% of 500 is $10. So you are risking $10 per that trade. Then here I put RR, which means when you win a trade, what is your risk to reward? Is it 1R? When you target 1R, 1-to-1, you know 1-to-1 is not too good. If you're targeting 1-to-1, then you want your strategy to be at least 80%, 70% win rate, which may not be possible all the time. So let's assume we are win RR is 2. So most times we go for 3, some go for 5, but let's assume it's 2. How many trades do you think you can take per day? The number of trades you can take per day depends on the time frame you are trading with. As a day trader trading on the 5 minutes time frame, sure, you should be able to take at least 3 trades in a day, or minimum 2. You should be able to take 2 trades in a day. And it still depends on your style. Some markets are more volatile than the other. So let's say you are able to take 2 trades in a day. Your risk reward is 2. Let's try to keep it low so we do not keep it high. Then what is the win rate of your strategy? Some strategies, they have 50% win rate, while some strategy, they have 30% win rate, while some strategy, they have 60% win rate. But let's just say we have a 50% win rate strategy, which means in that particular day, out of your 2 trades, you are winning 1, you are losing 1. And so the rest are automatically calculated. So it says daily winning trades 1 trade, daily losing trade 1 trade. So when you lose a trade here, you lose $10. When you win a trade here, you win $20. So first month of trading, which is day 1, you have a risk of $10. I shouldn't even say day risk, I should say risk per trade. So okay, then we see it's still good, day risk. So you are risking $10 per day. Then here you make a profit of $20 because you have won 1 trade with a risk to reward or reward to risk of 2, which means when you win 20, and here in the day you lose 10. So profit and loss, your win of 20 minus your loss of 10 gives you a 10. So balance for that day becomes 510. And this uses compounding method. So you compound your balance. You know, there are some times where you like risk $10 per day. You have a balance of 500 and you are risking $10, and you just want to fix your $10 risk per the month. Here I put the month to be 25 days. Sometimes you may take a trade every day for 30 days if you work on Sundays, and especially in the crypto market that is open. But some on forex, I think it should be like 20 days. So you can base your calculation on 20 days. But here I've put it to be 25 days, including Saturdays. So for 25 days, every day you can be risking $10. And if you are winning, okay, with a 2-to-1 risk reward and 50% win, which means you win 2, you lose 1. So you are earning at least $10 per day. So if you fix your risk to be $10 without compounding your account, then if you win $10 every day times 25 days, at the end of the month you win 250. But if you compound, it means if your balance today becomes 510, then you are basing your 2% on the 510, which means the next day you are risking 10.2. That is what I've done with this calculator, because at the end of the day, we will see that how much you earn is way more than how much you will earn without compounding, while having a static of fixed profit. So assuming you make $10 here every day for 25 days, your profit is 250. But look at the end of the 25-day year, day 25, 820, which is 820 minus the 500 in initial. That is 320. Now 320 minus 250. So you have a $70 more profit when compounding. Then this is, we are just going with the minimum because some days you will happen to make maybe 5R. Or your trades will not be swinging to 5R, 6R, but some days you even end up with 1R. That is why I'm choosing to use 2 and 2 trades per day. So on day 1, you make the profit of this till day 25. And as you can see, at the end of the month, your balance becomes $820, which means you have grown your account more than 50%. Here are the performance: total risk 320, total profit 640, total loss, then profit and loss 320. Here is monthly takeout. If you wish to take some money out of the profit every day, you can put this as 10%. Then rollover, which means you're taking $32 out. You can use 20%, taking $64 out. These are for bills and maybe monthly expenses you have to pay for subscription and co. Then rollover, you'll be able to roll over 756 out of the S20 balance, which goes on to the next month. And this is the second month, end of the second month, which means you have 100%, more than 100% your account by having a balance of 1,240. So let's try. If you are still risking, you have a 500 account, but your risk reward is 3, and you're able to take 5 trades in a day. And let's assume your win rate is 50%, because some of us, we scalp, we trade on 1 minute time frame, 2 minutes, 3 minutes, so we get a lot of trades in a day. So assuming you're able to take 5 trades in a day and you win 50% of it. Here, winning trades is 2.5%, but we know there is something like 2.5 in trading. It's either you win 3, lose 2, or you win 2, lose 3. So at the end of the day, with your $10 risk, right, you'll be making 5,471 if you are able to take 5 trades in a day and win at least 2. Or rather, let me put it that we have a bad win rate. Now let me say 40%. Okay, good. 40% win rate on a strategy now will then give us 2 winning trades, 3 losing trades. We take 3 trades in a day, we lost it. And the remaining 2, we took 5 trades, or we are taking 5 trades in a day and losing 3, winning 2, which means we have a 40% win rate strategy. Our strategy is just 40%. But we are guaranteed to take 5 trades in a day. And when we take 5 trades in a day, we are guaranteed that the wins will reach 3R. Sometimes it may be 2. Sometimes we may cut it early. So you have to factor those in. So this is just like a sniper. So if these rules are followed, then at the end of the month, you will be making a profit of 2,000. Not profit, you will take your balance to 2,145. That's at the end of the 25th day. But if it's 20 days and you are guaranteed that every single day you take a trade, which may not be possible. But like I said, there is an offset. Some days you make 6R. Some days instead of the 3R, some days you make 8, some days you make 1. So they kind of offset each other. So let's just take this as it is. Based on it's computerized, so computer do not note some things. So at the end of the 25-day month, we'll be making a balance will be 2,145 from 500. That is more than 300%, right? Then if you roll over, taking out 20% of the profit, then you add the remaining profit to whatever is left. You roll over 1,008 to the next month. At the end of the next month, you are making 7,000, which means it can actually take us 2 months of serious work or serious trading to actually make weight. Making weight is easy, and once 2 months passes, in the 3rd month, how much will you be making? 25,000 in 3 months from 500. This is actually possible, but then it all depends on our psychology. Our psychology must tell us once we see a setup, a clean setup, not just any setup, we shouldn't force it. We should take it. Then we should manage our risk. And with this, even if our winning ratio is less, 40%, let me try 35%. 35% is giving me 1.75 winning. But then 35% win rate on a strategy is low. Most strategies are 35% thereabout. So if we have a bad winning strategy, or which means we lose more than 3 trades, and we are guaranteed to take 5 trades, and the one that wins gives us 3R, at the end of the month here, you have more than doubled your 500 capital. Second month, you have more than tripled it or quadrupled it. Then the third month is already big, and the fourth month is wow. So you see it. What of those people that claim they have a, let me say, 65% win rate on their strategy, but then they are able to take just 3 trades in a day, and maybe 2 hours, but their strategy is 65% win rate, which means at the end of the month, if they are able to take a trade every day, assuming you are not able to take a trade every day and you are able to take only, maybe you are able to trade in a month, maybe 15 days out of the 30 days in a month, you're able to get a trade for 15 days, which means we should focus our mind on the day 15. And by day 15, you already have 1,148. So if you take 500 to 1,148 in 15 days, is decent enough. Then you can also take this to 2,000 plus in the next day. But if you're able to get a 3 trades every day for 25 days, then at the end of the 4th month, you'll be having $65,000, all the way from $500. So that is why winning while trading does not exactly depend on the strategy, but on your psychology and your risk management. Follow your risk management to the letter, and know that if you have a good setup, just take it. You can never tell which one will work and which one will fail. But if you have a 20% win rate, this one shouldn't be good. And you are taking 3 trades in a day, your RR is 2. That means you are winning less than 1 trade. And you are losing, maybe you are losing 3 trades, you are losing 2, winning 1. I don't know. This calculator cannot determine that. But then your profit and loss, you keep losing everything you have. But then in a month, with a 2% risk on your 500 capital, which is $10, in a month, you are not even losing your whole capital. You still have some things. That means you have a totally bad trade, which means you are taking 3 trades per day and you are losing them. So how I take it is, you have $500 and you are risking 2%. That $500 divided by 10 is 50. So you have 50 trades to take to entirely lose your capital. Or just do it like this, 100% divided by 2% that you are risking. If you are risking 4%, 100% divided by 4%. So you can take 25 trades before you lose your capital. But when you are losing, here, the compounding effect has also made it in such a way that it reduces the risk. But if you risk 10 on this day and you end up losing, risk the same 10 on every other consecutive days. Do not decrease your risk. So when you win, you have a bigger chance of recovering quickly, because when you are reducing your risk, you are also reducing your chances of a break-even, early break-even. So don't work with a strategy. Let me say 30%. 30% is still not good. So don't work with a strategy which is below 35% win rate. And all those people who claim they have 99 points, all those people who claim they have 99.99% win rate on their strategy. Let's see what happens. $500, which means in a month you're taking your balance to almost $1,500 with 100% win rate. But is 100% win rate visible? No, it's not. So that is it about amassing wealth with trading. So 3 things are required: your psychology, your risk management, and the strategy. Get a strategy that is at least 35% win rate. At least 35% win rate. And then the rest depend on how many trades you can take. 2R is visible because when the trade gets to 2R, you are putting your stop loss and profit already, or you can even take it. But sometimes 2R trade can be a runner. So, but at least 2R is achievable. It's achievable. And if you take 2 trades in a day with 35% win rate, it's still good. You're still making money at the end of the day. Low, but you still make money. So let your win strategy be at least 35% win rate. Thank you for watching, guys. And do not forget to subscribe, share, and like this channel. So it types with the algorithm. That's what I've heard. Many more people can be able to see and learn the same thing you have been learning on this channel, all for free. So thank you for watching, guys.